It's my time, think it's my year, yeah.
Yes, what's up, everybody? Happy Friday! Welcome to the morning show. It's the best morning show in finance. I'm Spencer Israel here with JC Parets and Steve Strazza. We got a jam-packed show today. Man, jam-packed show for a holiday weekend. We got Ryan Dietrich coming on at 9 from the Carson Group. We got Kimmy Sokoloff coming on after that. We got Ian Culley, head of FIC All-Star Charts, coming on after that. And we have a surprise guest coming on after Ian Culley at 10 a.m. to talk about a big macro event happening today. We got a lot to talk about. We got some earnings, Nike, Constellation Brands. It's Crypto Friday, so we have to talk about Bitcoin, obviously. And it's the last show of the first half of the year. I hope we have some takeaways, everyone. I hope we have some wins, some losses, some predictions that were right, predictions that were wrong. Of course we do, obviously. All right, let's get to it. This is the morning show. Roll my intro.
Big day today. Big day today. Last day of the quarter. Last day of the month. Last day of the week. Last day for Steve Strazza. Steve, are you gonna miss us?
Last day of the first half. Yeah, man.
Last day of the first half. Steve
Big
Strazza
day.
leaving on a jet train, right? Is that what's going on? Leaving on Tuesday. So what day do you get into Singapore? It's Wednesday.
Yeah.
Late Wednesday. Is that the deal?
I don't know what time.
Are you looking forward to your 24-hour flight?
No, not at all. It's not 24 hours. It's not 24.
It's gonna feel like 24 hours though.
I think it's 16.
Oh, is that all? Oh, that's nothing. Hey, you'll be fine.
Well, Strazza has to fly west first, to California, which is a bit of a.
All right, so you'll break it up, and then I told Strazza to bring a lot of reading material. Clearly, by the way, Spencer didn't get the memo about the blue shirt today. You didn't get the memo?
I don't own any shirts in that shade of blue either, so it's.
I'm from Florida. Strazza is now a Floridian. It's a Florida thing, right, Strazza?
I own way too much of this color. He's always making fun of me. Everything is blue. No, but I'm psyched for Asia. It's going to be a blast. Any book, podcast, any content requests, send them my way. I'm making a list now for these long
I thought
flights.
You said you were going to be writing in the plane.
I'm going to write, but how much can you write? Right? At some point, I got this nice little neck thing, and it has a hood on it. I could pull it over my eyes and just nap out, audiobook it up. So that'll be.
I got so many podcast recs for you. I'll give them to you later.
You're such a jet setter, Strazza. Such a jet setter. Such a global businessman.
I'm not the best traveler. I've traveled plenty, but never a trip like this. So I'm planning to gain some experience. I'm trying to get pretty good at it.
If you guys are in, I'm going to say it again, Strazza and Sean and the crew are leaving on Tuesday. I'm going to be more like Basil Exposition from Austin Powers. All right,
we should tweet the schedule, JC, with all the cities.
I'm going to send an email out. But if you are in Singapore, in Kuala Lumpur, in Bangkok, Ho Chi Minh, Hong Kong, Taipei, Tokyo, or Manila,
I think that's it.
Shoot us a note. It's 8 cities. The All-Star Charts global tour starting in Asia. 8 cities. If you are in any of those cities, you want to come hang out with the crew,
email us.
Say what's up.
Email us at the email on the screen.
Yeah.
If you're in any of those cities and you're going to be there for the next 3 weeks.
Yeah. This is serious. This is no joke. I have been incredibly fortunate to have been to almost all these cities, most of them several times. It was such an amazing experience for me, not just understanding the culture, but talking to traders and investors on the ground, eating the good food. I mean, I'm a Cuban kid from Miami. So when I'm in Mumbai or in Taipei or in Kuala Lumpur, the cultures could not be more different. So getting that sort of perspective has really been helpful. Steve Strazza, Sean McLaughlin, you guys are going to learn a lot. You guys are going to come back with wisdom.
All right, we got some stuff from the chat. Sam says, bring a handheld / foldable umbrella. The Southeast Asia rainy season awaits.
Bring it on. Bring it on.
Dude, he's from South Florida. He's like an expert at rainy season. Are you kidding me?
I hope it rains.
Yeah. Cool down a little.
135 says, come to London. We will come to Europe. We will.
This fall.
It's
assuming Strazza makes it back alive from Asia. Europe's in the fall, so stay tuned.
Yeah, I'm getting all these questions from our friends. I think we have some people who want to join us on the next legs, these journeys.
Well, we'll see what happens. It's elite company here. Elite company. Got to be very choosy. Should we talk a little bit about the markets? Come on, let's hit it. Hit it, Spencer.
Yeah, and a great point. Whoever said in the chat. Yeah, very patriotic today. Red and blue. And for July 4th.
Yeah, I was gonna wear
more of like a brick red. Ours is like a light blue. None of these are USA colors, Spencer.
I have an American flag shirt, but I couldn't find it. I was so bummed. I ran out. It's here somewhere. Anyway.
All right, state of the markets.
Hit it.
JC, you were in a bad.
Well, I know it's Crypto Fridays, and we'll hit the Crypto Friday bumper in a second. But I just want to reiterate something. We've been buying stocks very aggressively now for really since the end of last summer. Early fall last year, very aggressive. Purchases of stocks that have obviously worked out. But in real time, in the fall, throughout the holidays, in Q1, throughout Q2, I've gotten a lot of pushback. Angry emails. The tweets are on another level of how irresponsible I am for telling people to buy stocks in a crisis and a recession and the end of the Fed. The financial system is about to collapse, and what am I thinking? Telling people to do this and that. Number one, I don't tell anybody to do anything. I really don't give a damn what you do with your money. You can buy stocks, you can short them, you could be in cash. It doesn't matter to me at all. I don't care. Doesn't matter to me. I'm interested in one person and one person alone, and that is myself. And I will tell you what I'm doing happily. I do. You're welcome to do as you wish. But I will tell you this. A lot of people keep telling me it's a bear market rally. One of the funnier oxymorons, one of my personal favorites, bear market rally. It can't be both. The S&P 500, today's the last day of the quarter. S&P's up over 7% this quarter. And if my calculations are correct, the S&P 500 was up over 7% in the first quarter. And check my math, but in the fourth quarter last year, the S&P 500 was also up over 7%. Let me tell you something. I've been doing this for over 20 years. I've studied every bull and bear market in history. You know what doesn't happen in bear markets? Stocks don't go up every quarter. In bear markets, the S&P 500 doesn't put up 3 times the average quarterly returns, 3 consecutive quarters. Like that doesn't happen in bear markets. By definition, right? By definition, when the S&P 500 goes up this much every quarter, we call those bull markets, right? Stocks go up in bull markets, stocks go down in bear markets. Putting up 3x returns every quarter is literally the definition of a bull market, right? If you have not been buying stocks because maybe you don't like the fundamentals, or maybe you haven't been buying enough stocks because you don't like the economics, perhaps you should focus less attention on things like fundamentals and economics, and maybe more attention on the only thing that's actually going to pay any of us, and that's the prices of these assets. And one thing that we know, we have the data, it's just a fact, is that asset prices trend. We know that. It's a fact. It's not random, right? This random walk theory was, just a theory, just a hypothesis. It's been proven wrong, right? Just a hypothesis. Asset prices trend. They are not random. So you can call the last year anything you want. You can call it a hippopotamus if you want. But over the last year, the majority of stocks have been going up from the lower left to the upper right. The majority of stocks. By the way, not just in the United States, but all over the world. So, again, you can call the last year anything you want. It's a bull market because that's what happens when stocks go up every quarter. It's called the bull market. But you can call it anything you want. The bigger question is, What's going to happen next? What's going to happen in the third quarter? What's going to happen in the back half of 2023? Well, you can bet that the asset prices are going to continue to trend in the direction that they've been trending in, up, or you can bet that all of a sudden, completely out of nowhere, with no warning or breath deterioration or downside leadership whatsoever, you can bet that all of a sudden today, those trends are going to change and stock prices are going to start to fall. You can make that bet if you want. We are continuing to bet that the trend is going to continue, and we are looking for opportunities to buy stocks, and you are free to do what you like. I really don't care. Maybe Spencer cares. Maybe Strazza cares what you do. I do not. I'm interested in numero uno. I only care what happens in my own portfolio, and I will share this with you guys.
And that's how I look at it. Strazza, any pushback on anything, on any of those things?
No, I've been with you every step of the way. I'm excited for Ryan Dietrich to come on because I know he's got some bull market stats for us. I want to take you back. You talked about how we've had all of these consecutive positive quarters now for the stock market. We are putting together presentations for Asia. So I'm looking through old decks. And I want to show you a deck from, this was, I think, October 31st of last year. This is about 2-3 weeks after, 2 weeks after stocks bottomed. So,
and was it pretty obnoxiously bullish?
No. So my point is, none of these charts are even showing price. Okay. And it was mostly environment stuff back then that we were talking about, right? We were looking beneath the surface. We were doing a lot of market internals work, but it was a lot of seasonality, sentiment, breadth, far more than we're talking about today. And that's because we were at a turning point. And that's the time to weigh those things more. So, Fonz, do you have the charts ready? Let's start with 15 here. Sentiment was completely washed out. This is the average AA and AAII and II, Investors Intelligence, bulls and bears in the middle and lower pane here. So total washout levels. Next one shows the same thing. Yeah, next one. So sentiment was as bad as we've seen it since the COVID lows, and in many cases, even back to the financial crisis, right, JC? Depending on what sentiment measure you were looking at. So we knew that sentiment.
Some of like if you look at consumer sentiment, it goes all the way back to like the Great Depression.
Right.
So depending on what you were looking at, like this is some of the most extreme bearish sentiment of all time.
So we saw enough from sentiment to know potential tailwind, right? So sentiment is giving us the green light here for market bottom. Then we looked at something like seasonality. Once we got through September, we knew, okay, the back 3 months of the year, and then into the Santa Claus rally and all the good stuff in Q1 of the next year. Throw up the bar chart. There we go. Right. So seasonality was kind of checking the box over shorter term timeframes and longer term, more cycle timeframes. Right. So if you look at the presidential cycle, that was checking the box too. So we kept on getting these, it's a good environment for a bottom. And then we eventually did look to price. But remember this one? This was in real time when new lows peaked back in June. And then we got that bullish divergence with fewer stocks making new lows into that, now infamous CPI print on October 13th.
Infamous.
Right.
Infamous.
So fewer stocks confirming the new lows at the index level back in October. And then we started looking at like short-term breadth measures. Right. So you see that deterioration in new lows as we bottomed and started rallying in late October. And then you see that increase in new highs. And this is my favorite one. We caught some slack for talking about this last year because it did double dip. It double dipped really quickly, right back to that 15% level, bounced off and then went back to it. I was talking to the guys yesterday. You don't look at a chart like this and say, okay, once we get that 15%, level and really the reclamation of it, that means, the lows are in, start buying stocks. We're looking at this and 10, 15 other things that we look at, for turning points. And if enough of them are saying yes, then something like this, maybe you don't worry about the little double dip. But this ended up being really great information again. So I just thought it was really fun to kind of
just tell you this is a good lesson. And I like to broaden this out. Normally when I'm doing this kind of work, it only happens every few years when we're looking at the percentage of stocks above their 200-day moving average down to 15, 20%. As you can see here, it rarely happens, right? But when we're in one of those environments, we're looking at this every single day. At least I certainly am. I like to expand it to the New York Stock Exchange, stocks only, not just the S&P 500. You know what you're going to find? You know, you could say the 20% level, you could say the 15% level. I've had this argument or debate with very smart friends of mine, somewhere in that area. You know, when the percentage of stocks in the New York Stock Exchange above their 200-day drops below 20%, even 15%, you know, that's sort of like the heads up, right? That's sort of the alley-oop.
Yep.
And then when the percentage gets back above 20, on the way back up, that's the buy, right? That's when you're looking to put money to work very aggressively on the way back up. So not on the way down, catching a falling knife, but once it does that, that's the heads up. And then on the way back up, that's when you buy. You could call it 15%. You can call it 20%, depending on what index you're looking at. But just philosophically understanding that that's how we're approaching that. And notice how I couldn't tell you the last time I pulled up a chart of stocks above their 200-day moving average because I don't care. It's really at rare extremes. Last fall was one of those. Certainly, we're not in that environment now.
You're absolutely right. I don't plan to look at this chart again for like another 2-3 years. Right. The same with.
Are you saying that we're going to have a bull market for another 2 or 3 years? Very aggressive, Strazza.
Maybe 2 years, but then no, because then we get the bear market, and that's when you got to look at the chart for the bottom. So it's
wow,
ways
3 years. That's a lot. So if we're not getting one of those for another 3 years, you're looking at Dow 50,000.
I think the more important point.
Oh, they're not going to like that. Oh, did Strazza just say Dow 50,000? Is that what you're saying?
I did not. I think the more important point to make about a chart like this, because it looks perfect when you go back, right?
Yeah.
Still not a magic indicator. None of these things are.
I was going to say, is anything?
It like, if and when it does happen again in 2-3 years, I'm not just looking at this in a tunnel, right? There's other stuff that we're looking at and weighing that should be in place at the same time if it's a true market bottom. And, you know, last summer and last fall, that was very much the case. We just had, you know, a long list of evidence that kept piling up heading into year end, suggesting that the bottom was very much in. So I thought this was a fun little exercise to go back and see this in almost a year out now.
All right, I got one more chart for you, and then we're going to head into Crypto Fridays because it is Crypto Friday. We got a lot to talk about. Can you throw up slide 1 here? We're getting a question from Dan suggesting that we are about to enter some seasonal headwinds and things are popping like crazy. Do I just shrug off seasonality?
Things are popping.
Pre-election years historically are the best years ever. You know what the second best years are is the election years. So, you know, while you might have, I mean, seasonal headwinds is aggressive, I think. You know, we'll talk to Dietrich about it, see what he thinks. But in pre-election years, you know, those seasonal quote unquote headwinds, you know, be a little bit careful. And not to mention that even if this was a period where it's the worst period seasonally, you know, at the end of the day, price is what's going to dictate what we're doing. The seasonality kind of just helps put things in perspective. I wouldn't say shrug it off. Just understand that it falls within the context of the most bullish time period for stocks. You know, the third year of the decennial cycle, the annual cycle, the presidential cycle. I would argue the headwinds are not that bad. July also tends to be a very good month. Shout out Christopher pointing that out as well. I agree.
You know, when you kind of blend the annual cycle into the presidential cycle and look at it here, like the whole sell in May thing doesn't look so bad, right? You know, you do have the midterm year here, which coincided like almost perfectly with the low last year. But like you said, the pre-election year and the election year, do you really want to sell in May? I don't know. Doesn't look like it. Look at the blue line.
Did you just say the third year of the decennial cycle? Is it like
yes,
like the third,
that would be this year, Spencer?
Because it has a 3 at the end of it.
Compared to, you're measuring a sample size of what, like 10?
No, 7. It goes back to 1950.
Oh, okay.
It's measuring decades.
A sample size of 7. Okay, just making sure. Okay.
Well, it's a sample size of 7 for the decennial cycle. For the pre-election years, it's what, like 15 or something like that, 14, right? Do I have that right?
Just to be clear,
something like that. And then the annual cycle is about 70 something, 73. Is that not enough for you, Spencer?
7, generally not. No.
Okay, well, now if you just use those 7 if you just use that sample size of 7 and made all of your trading decisions based on that, number one, I would agree that it's too little of a sample size. Number two, I would say you're an idiot, right? So there's that.
Yeah.
So the decennial cycle is one component of an equally weighted composite that we create.
Okay.
That I would argue a sample size of 7, considering it's only been 7 decades, is enough for 1/3 of the component of a seasonal cycle. That might be the 15th most important thing that we look at.
Guys, how long has the S&P 500 been around for, Spencer? What do you want us to do? We're using all the data we have.
It's better. It's better than these morons with their inverted yield curves. How many times have we had an inverted yield curve? And whenever the yield curve inverts, everyone's like all up in arms, like it's going to be the next coming of the Great Depression. Like, how many sample sizes do you have there?
Well, you could say it's only 7 decades of data, and I could say it's all the data we have.
Right. Exactly. You got a better idea, Spencer? Are you
No,
one of these
I just didn't realize like that
That's
the third
perfect.
year that we tracked seasonality based on the last number of the year, right? So the threes.
People want crypto, okay? The people.
Okay. All right.
All right. Chart, Spencer. Come on.
Whatever. All right.
You know what, Mr. Strazza? Can I just tell you something?
What?
You know, one thing that we haven't been able to say for quite some time is that Bitcoin is hitting new 52-week highs.
Dude, yeah. What did you expect? Now let's see some other cryptocurrencies start to hit some new highs. That would be nice.
Yeah, I mean, listen, you know, new 52-week highs and Bitcoin in the same sentence is not something we've been able to say since 2021.
Mm-hmm.
And it is now 2023. Spencer wants to talk about small sample sizes. Bitcoin's been around for a decade, bro. So what are we just going to ignore? You know what I'm saying? What are we going to do? Ignore? Oh, technical analysis only looks at the past. It's like, well, if you can get me some information from the future, I'd be happy to take a look. But us mere mortals are stuck with information from the past.
So listen, what is there to say about crypto today that we haven't already said? Like, we've talked about this a lot. I know it's Crypto Friday. We've talked about how much we like the miners. We've talked about the importance of 25. Then we talked about the importance of 30. You got anything new for me today for Crypto Friday? You got any new charts?
Bitcoin Cash. Throw up the Bitcoin Cash. What the hell is going on in Bitcoin Cash? Anybody got an answer for me? This thing is absolutely ripping. I own Bitcoin, you know, the boomer Bitcoin. I don't own the cool. Clearly the cool kids are in the Bitcoin Cash. Something's been going on here. You want to talk about some other cryptocurrencies working? Well, are you not entertained?
This looks like one of those crypto charts you want to run from. Give me a break. Bitcoin Cash 200% in a matter of weeks. Yeah, no, thank you.
Are you not entertained?
I am entertained. So you own this thing? And what is it?
I do not. Bitcoin Cash, by the way,
Doesn't
call it
look
what
like
you
cash.
want. It is the 14th largest cryptocurrency, coming in at $6 billion market capitalization.
This is not a stable coin. It's not a stable coin, correct?
Nobody said it. Nobody said it was a stable coin.
Well, it sounds like it's a stable coin. It shouldn't be named Bitcoin Cash. Cash.
Listen, stable coins don't move like this, and if they do, you run.
Well, I have a little bit of a problem with the name here.
Bitcoin Cash. It's a fork, like the Doge. It's a fork.
You know, cash is something that you hold, right, and needs to be stable. You wouldn't want your cash to look like this ever. So
nobody said it's a stable coin. Just because you don't like the name doesn't mean people can't make money. I don't like the name of a lot of stocks. Like, remember that golf stock we were talking about yesterday? That's a stupid name. Doesn't mean I'm not going to buy it.
Acushnet, just because you can't say it.
I can't say it. I gave up. It's a dumb name. What does that even mean? Is it what language is that?
Let's talk about Binance.
I speak 2 languages, which is 2 more than a lot of people, and I don't know what that is. That's a new one for me.
So Fidelity finally announced their plans. You heard that?
No, can you tell me what's going on?
I don't know. Fidelity's getting in the game. I didn't read the article because we already know what's going to happen at this point. They're following BlackRock and the like.
What about the Litecoin? Can you punch that up there, Fonz? Throw up the Litecoin.
This one I really like. This one looks really good. I was so
see?
happy. Yeah, I was really happy to see this in the deck today. This is one of the originals. When I first started trading crypto, God, 7 years ago now. It's been a long time. This is one of the, it was Bitcoin, Ethereum, Litecoin. And I remember, I think it was Gemini or Coinbase, whatever I was using way back then. They only had 3 initially, and it was these 3. So, fun time.
You think we got a breakout?
Listen, I like it. 100 key psychological level. Been watching this chart for a long time, really all year. Up here keeps knocking on the door at this, critical polarity zone. You have the support level from back in early 22 too. So now you got the polarity flip. I think we take out 100. Let's go. This one, it's nice to see another chart outside of Bitcoin that I might be interested in buying in crypto right now.
100 your level, not 105. We're 100. You're good.
No, let it get the breakout, but it's still that psychological level, right? Are you drawing this with a pencil or a crayon?
Crayons, baby. You know how we roll. Can you throw up Avalanche? Because this, we've been in an environment where and you called it out a couple days ago. I forgot what stock. I think it was Oxy. The not a top pattern. So if we have been very successful as of late buying the not the top pattern.
Yep.
AVAX potentially a not a top pattern.
Classic non-top. I mean, this is a monster non-top. You should write a post about this.
AVAX right around 4.6 billion in market capitalization, currently the 18th largest cryptocurrency. So what's the bet? The bet is you own AVAX if it's above 10. That's the trade.
Would you rather own AVAX or would you rather be buying Litecoin, on strength above 100 though?
It's a good question, man. This is a good question. It's a great question, actually.
You got to buy the leaders, in my opinion, right now. If participation is thin, then it makes your job easier. Short list, own the good ones, own the miners, own the Bitcoin, buy the breakout in Litecoin. I get it. This is constructive. I like that it's holding, from a bullish perspective, but I don't want to go throw money after a pattern that looks like this yet. We can drill in.
You had to bet. So a month from now, we're looking back and you think that Litecoin's outperformed. Okay. A month from now, Bitcoin's at 40,000.
Yeah.
The alts are joining in. You're telling me that Litecoin's outperforming AVAX.
I'm telling you that's the bet I would make as an investor. That's how I'll be positioning my portfolio.
Not what I'm asking you.
What?
Bitcoin goes to 40,000. It's up 30% this month, hypothetically, in July. We're having this conversation 1 month from today. You're back from Asia. 1 month from today, Bitcoin's up to 40,000. It's in the 40s. Both of these are higher. You're telling me that the leader is going to be the outperformer in AVAX, not the catch up on the not a top trade. Is that what you're telling me?
They're both altcoins. They're of similar size. Not super familiar with their betas. I would say yes. Okay, because if that base goes, you're going to see follow through. You get a reaction leg higher. I would say yes, Litecoin. And again, I'll buy the breakout in Litecoin.
I'll take the exact opposite end. I think if those circumstances are true, and we have no idea because us mere mortals do not have information from the future. Even with the small sample size that we do have, Mr. Spencer Israel, because it's only been trading for a few years, I'm gonna go with if those scenarios are true that the alts are participating, Bitcoin's in the 40s. Yeah, AVAX is outperforming in my opinion, but I don't necessarily know that it's going to be all that much. Can we talk about the?
Hold on, wait on that point. JC, is this conversation any different from the one that we've been having about the equity markets all week? No, do you buy Oxy and Chevron? Do you buy the laggards at support, or do we buy the strong ones? This is the toughest question you're going to ask yourself as a trader in bull markets. It happens every cycle, and I don't think there is a perfect answer. There's just not.
Well, the perfect answer has been what we've been doing. Has been betting on that rotation, small caps, industrials. Like that trade's been working, so we answered it clearly.
You know what the easy answer and the real answer really is? You buy them both.
By the way, can I just talk about how ridiculous you and me look with the same color shirt on? Like we look like two idiots.
I said I'm going to change. I'm
We
uncomfortable.
look like two idiots. Listen, do we look like two idiots? You should have said something.
I think
Spencer.
it's funny. I think it's hilarious.
See,
Hold on, one last chart.
With Spencer, we're doing the American flag here. We got the whole red, white, and blue. So
None of these colors are in the American flag. I don't know if you're colorblind.
Mine's closest. Mine's closest.
I am colorblind. Second of all, this is blue, and blue is in the American flag. You're talking about shades of blue. I'm just talking about colors. Okay, if you look at the color wheel, there's one blue.
No, these are like North Carolina, like Columbia colors. These are not American flag colors.
How good is Tar Heel blue?
One more chart before we bring in Dietrich. I'm stoked to have Dietrich here, by the way.
The coffee.
The WGMI. So this is the Bitcoin miners ETF. How long has this bad boy been trading?
So as
is there enough of a sample size that Spencer's not going to cry about it?
Well,
you're the one that cries about liquidity in ETFs, not me.
This is we're all going to make it, right? That's what that stands for.
That's what the kids say. Yes, we're all going to make it. So I guess if you don't own this, you're not going to make it.
So I brought this one up last week, Spencer, and didn't I get yelled at for it not being liquid enough?
Well, it's only
and now
it's only 10. First of all, it's only $10 million in assets. So this is a nothing burger. No one in their right mind is going to buy this. Where the value I think that it brings to the table, number one, is information.
Yeah.
Right. You're looking at the index of these components, right? This is almost like one of our custom indexes. Like we're not going to actually trade it. It's just information.
Yeah.
Right. Yep. So the value to me is understanding, looking at the components. So you got Clean Spark, CLSK, 10% of the ETF. You got Riot at 10%, Marathon at 10%. Shout out Marathon.
Wait. Clean Spark is in this?
CLSK.
Isn't that?
This is a $500 million company, so it's super tiny. It trades though, and it's a capital market stock. Is it just a mining company? It looks like it's just a mining company. Engages in mining of Bitcoin operations.
Right.
It also provides data center services, including rack space, power, and equipment, and various cloud services as virtual server. So it sounds to me like this is in the picks and axes of the Bitcoin mining operation. Good business to be in, I think. No. Clearly.
Listen, one of these guys came out and raised filed a mixed shelf for like 350 million yesterday. I think it was Bitfarms, and stock didn't even budge. I mean, these guys can get away with pretty much anything right now. I think we're talking too much.
Are you saying that there's an underlying bid in this space?
Yeah. No, it's good to see, right? I think we're talking too much
about. Good to see if you're long.
We're talking about these stocks every day. Listen, they're very small, insignificant to, I don't know what this WAGMI is, but these are small names. They're very speculative trades.
Yep.
I think somebody came on here yesterday and made the point that, what these things do in the long run, we don't know. So it's that kind of a thing. They're trading vehicles. Can I just tell a quick story about Riot? Because I think I'm somehow...
No. You can tell it after our guest because we're running behind already.
Well,
Ryan Dietrich. I thought you said Riot. You said Ryan?
Yeah, I said Riot, but we'll just do it later. But I also think we're talking about
he didn't say Ryan. He said
I thought you said Ryan. All
right. Ryan Dietrich, Carson Group, Chief Market Strategist. Bring him on.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Dietrich.
Can you hear me okay?
Oh, wow. You sound great. That
well, you like that? Got two things. I wish I got the blue shirt memo. That was very rude of you guys for my first time as a guest. And I love the comments. Yeah, that's true. I love the comments. The comments are cracking me up. I mean, hopefully they're nice to me. But no, I'm honored to be here. I know you guys invited me a few weeks ago. Been busy, but hey, better late than never. I mean, it's a great bear market, right? This recession's wonderful. Bear market. I mean, we're just loving it. We're overweight equidties. I mean, we see the world like you guys. This is just the best bear market I've ever seen. So
let me tell you something. I fucking love recessions, man. This is it. I don't know anybody who's been so profitable in recessions. These recessions are fantastic. One of the things said earlier that JC is the only one that makes Ryan Dietrich look like a bear.
Well, is that bad in a bull market? I don't know.
No, listen, this exactly. Was,
right.
Dietrich and I have been pounding the table to buy stocks for a long time, getting a lot of pushback from the old Twitterati. And Dietrich, you and I, we've been doing this for quite some time. When they all think we're crazy, it's usually because we're probably onto something. You notice that?
Oh, I've noticed it. I mean, I did a tweet literally October 13th, the day. Remember, we had that 2% sell off on the CPI worries and rotated higher, closed 5% higher. I just said, hey, listen, that's how bear markets bottom. That's how bear markets bottom, right? These 5% intraday swings. I shared the notes on Twitter and wrote a blog on it. And just go back, okay? Just go back and read the comments. I mean, they hated that. And you guys know this because you've been bullish too, but it was just like, okay, maybe we're onto something. And here we are 25% higher on the S&P, whatever it is. Three quarters in a row of 7%. Like I know you wrote something on that. I looked at it a year later, right? Only 10 times this happened. 7% gain, 3 quarters in a row. A year later, up about 10% on average in the S&P, higher 8 out of 10. Not wildly bullish, but my goodness, not bearish either. And we've shared a lot of these stats, but it just still looks like looks good. And we manage about $1 billion.
Do you hear that? A sample size of 10? Can you believe that, Spencer?
Yeah.
Can you believe it?
Yeah.
Come yell at Ryan. Ryan, were you talking about the comments from like last fall of last year, like last October?
Oh yeah, they were gems, weren't they? Yeah, there were a few of them.
I thought I was gonna have to leave Twitter.
Should we frame some? Should we frame some?
Oh man.
We could.
It's funny when you walk around like the StockTwits headquarters. I don't know if you've ever been to the StockTwits headquarters. They have like tweets like framed like on the walls. It's actually pretty funny.
One of my favorite ever. So this might have been the last bull market 10 years ago. And it was like a Yahoo message board or something about me. They go, I did a live thing and they had live comments, whatever. They go, I bet this guy got beat up in grade school. I thought that was funny. Like, that was my favorite one about me.
Yeah,
so I did not
get beat up. Dude, I don't think anybody was beating you up.
I didn't get beat up. I didn't fight.
You were doing the beating up? Were you beating up? Were you?
No. I might have hit one kid one time, but he probably deserved it. He's beating up my brother or something, but no, I don't fight.
Yeah, Dietrich's a good egg. Dietrich's always been a good egg, right? Right, Strazza? Dietrich's been around for a long time. All right, why don't we talk about, all right, fine. Enough with the victory laps. We nailed it. Stocks have gone up. Kudos to Dietrich. Kudos to us. Great. At the end of the day, it doesn't matter anymore. Right? Babe Ruth, yesterday's home runs don't win today's ball games. That is certainly true. Yeah. So it doesn't matter.
Comment from the chat that Dietrich sounds like Barry Manilow. Very cool, man.
Dietrich sounds great.
Yeah.
I have a face for radio, gentlemen. That's the way I like to explain it.
I don't know about all that, but the voice
for radio.
Sounds great. Sounds excellent. Yeah. Let me ask you this. Okay. So call it what you want. The last year, bear market rally, bull market, whatever. It doesn't matter anymore. The bottom line is the majority of stocks have been going up over the last year. It's just a fact. Right. Another fact is asset prices trend, right? They're not random. Well, the question is, do you bet that the trends are going to continue? And these lines are going to continue to go from the lower left to the upper right, as they tend to, right? Historically speaking, or is starting today all of a sudden, completely out of nowhere, with no warning whatsoever, are these trends now going to change?
We are overweight equities at the Carson Investment Research Team. We manage close to $1 billion of our advisors' assets and their clients' assets. We're still overweight. We still think this thing's got a good amount of time left to it. And we're with you. We are overweight small caps. We're overweight industrials, some of those cyclical areas. We think the baton will be passed a little bit. We've all seen it, right? Best year ever for the NASDAQ 100 start, I should say. Third best ever for the NASDAQ. We'll see where we close. So it makes sense. Maybe there's a little bit of a break there, but the bull market, that baton being passed just makes a ton of sense to us that those are the areas we're looking for some continued gains. We are underweight bonds. I don't want to use the F word, fundamentals, but I might for a minute here. it is what it is. This morning's inflation data is good, but we don't see the Fed cutting any time, maybe a hike or two. So we're underweight bonds, a little short duration, but we just think, equities in general, led by cyclical value and small caps, likely the second half of this year. That's how we're positioning our portfolios. And we think this bull market still has time.
So I'm not going to make it easy on you. I know that you go on these TV networks and they just throw you alley-oops. I don't know what kind of bullshit networks you're used to doing, but not around here.
All right, let's hear it.
Especially because we're friends and I could just do that. I'm going to make it hard on you.
Yep.
2 and 3. Best performing sectors in the back half of the year. 1, 2, and 3. Give it to me.
Yeah, well, I'll go with let's see here. I'll go with industrials 1.
You're going to lead the way in the back half.
I think they will. I do think they will. Is small caps considered a sector? Is that one of the 11 sectors? No, it's not. We'll go with materials energy then. Industrial materials energy. I think.
Wow, but if small cap, you could throw in small caps in there. You'd add that small caps.
Yeah.
So SMIDs in general. SMIDs in general outperforming large, smalls leading across the board.
That's fair. It's its own trade. You could throw SMIDs in there.
All right, that's fair. I'll give you that one only because we're friends. What about the financials?
Materials made a new 3-month high yesterday.
Yeah.
It kind of looks like they're going to be following industrials.
No one's talking about it, right? And the world-ending recession's coming too. So those are some positives.
Coming. I feel like it's been coming for years now. Is it ever going to come?
No. I know. I don't know. I spent a ton of charts. Spencer, if you want to get the one chart of the growth, it's near the end. The construction spending. If you want to throw it up, Spencer. I know it's not probably your normal chart, but anyway, just the incredible things we've been seeing on the economy and the stock market are truly fascinating, right? It's I don't know where people are looking at. I really don't. We share the data and we look at it, and it's this hard versus soft data. Maybe you guys will talk about that a little bit. The soft data, the polls, the sentiment polls, what people are supposed to be doing. They're saying one thing. They look at the hard data, and it's wildly different. And it's just, I don't know. I've done this for over 20 years. JC, I've known you for over 10 years. I've never seen a time where people feel one way, but they do another. We kind of see it, but it's truly fascinating. But again, as a steward of assets, as I work for 350 advisors, right? We manage their money. We try to advise what's going on. We cut through that stuff, and it just still continues to look like this trend is alive and well, and things are good.
Chart 11, guys. Chart 11.
Yeah, maybe
so
that's
Ryan
it.
woke up this morning and was like, okay, I'm going on a technical analysis show with JC and Strazza. I'm going to bring my best economic data for him.
Yeah, no. Well, I brought some other stuff too, but this is just like, I know this is probably normal, but I wanted to mix it up for you guys. And this is kind of the whole macro
this
view.
Is bullshit, Dietrich. This is bullshit,
not necessarily. Believe me, I follow the stuff I started with talking about, but just look at these surges. You can't tell me that's a recession, okay? People are investing, companies are doing things. That's not a recession. Maybe the ISMs and PMIs we all laugh at because it's silly. This is the real stuff. And then the real data, the advanced decline lines we all talk about, and some of the other things. That's the stuff I think we should be focusing on, not the end of the world, which I don't think is coming yet.
I got to ask, how old is this? Because when I look at a chart like this, I think inflation peaked, and this looks the way it does.
Mm-hmm. Well, that's more what companies are doing with capex, right? So it's not so much inflation. Look at this morning's inflation data, and I don't know if we want to talk about it or not, but PCE was fine, right? There's no inflation's, I don't know, little sticky.
Are you hanging out with the fundamental guys back in Cincinnati? Now you're back in Cincinnati. You're hanging out with fundamental guys.
I think I sent you guys 15 charts. This is the only one. Pick another one at random. Believe me,
let me ask you about the consumer, because Ryan, they keep telling me the consumer's dead. The consumer can't afford anything. Recession, household income, blah 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 blah.
Right.
All I see is cruise lines doubling this year, home construction making new all-time highs every day. The casino stocks are ripping. Like, consumers dead. Like, what are people talking about?
Well, I guess short answer is I'm not 100% sure, because I think what we've seen, stock market leads, the economy, right? And I think what it's saying is there's going to be a better economy. People are still doing things. Spending still strong, all that stuff, but just consumer discretionary versus consumer staples, that relative ratio we've all seen before. It continues to say the consumer is just fine, right? You could always pick some problems, but overall, I think things are still just fine from that point of view. And then the argument, Tesla is a big part of it, Amazon's a big part of it, sure, but the equal weight stuff that we all look at, those are still
equally weighted.
Yeah,
since
it's
the
wildly different.
Since the new 52-week lows list peaked last June of last year, consumer discretionary is the best performing sector on an equally weighted basis.
Yeah, exactly.
Not technology. Technology is number 3. So that's really interesting. All right, so we have a few minutes. What do you want to talk about, Ryan? What's on your radar?
I find it interesting. Hold on, I got a question.
Yeah, go ahead.
You mentioned your guys' outlook. Your bearish bonds, you think rates probably keep heading higher, but that's not impacting your outlook on equities. Still bullish.
It is. He's talking about industrials, materials, and energy, which should probably do well if rates are rising.
JC
and I threw in the financials, and he's staying away from that. You ignoring that question?
Yeah, we're more neutral financials in general. We did add some actually financial exposure in some of our models back in the third week of March. People thought we were absolutely crazy, but we said, I don't think the world's going to end. Credit spreads are still okay, and that's exactly what happened. But yeah, that's right. You want to be in those areas that maybe if rates stay a little higher. Those are the areas we should do better, and that's kind of where we're sniffing around, I guess is the way to put it.
I think JP Morgan is primed to make a new 52-week high today.
So making new 52-week highs as we speak.
If
you're into that sort of thing.
Well, it's 9:14. That's why I said primed too. But yes, okay.
They trade pre-market in the United States.
I'm aware. Okay.
Maybe not in Key West, but in the rest of the country they do.
Hey, we were talking earlier about seasonality. Can you bring up let's bring up chart 7 here that Ryan sent over? This is making the point that we were making earlier.
Here we go.
Right.
Yeah.
Ooh.
Yeah, I know you guys.
Seasonality, a tailwind or a headwind?
Yeah, I mean, so this is looking backward. Obviously, the best 3 quarters just happened, so it shouldn't have been a shock to anyone. Although it appears to be that those were strong quarters. And you could say things are weaker. I mean, I wouldn't be shocked at all if August, September, October we had a little pullback. But I mean, the bottom line again is, when you're up 10% the midterm year or middle of the year, and I know a lot of people talk about this. When you're up between 10 and 15%, maybe we're going to be up a little bit more for the S&P by the time this day's over. The rest of the year has been higher 12 out of 12 times, up like double digits on average. Okay, so just to say, seasonality, maybe near term's a little break. Hey, we had this great run, but to say that things are over, no. I mean, the strength is normally, it is what it is. Things trend. You guys talk about all the time. That's why I love the stuff work you guys do. You guys been all over it, so it's been awesome. And hey, between 10 and 15% is a sweet spot, and that's right where we are potentially for the S&P here. You get a little less when you're over 15% because 87's lumped in there, and that obviously hurts the final year returns, the final 6 months. But that's where we are. And
what about the election year? What about next year? Going into next year, how are you? Is that too far out, or are you thinking about it already?
Mm-hmm. Well, we're thinking about it. I guess I do manage the more tactical model, so we will say 3 to 4, 2 to 3 quarters out, I guess. But yeah, I think it makes sense that things potentially could slow down a little bit next year, and that's kind of I think perfectly fine. Maybe you flip things around, but I guess we'll have to come back in 2 quarters and talk about that. But for now, we still think this thing's got some life to it.
So what is the best stat right now that would support a bullish thesis into the second half? You do
12 out of 12. 12 out of 12. Is that enough of a sample?
Yeah, I mean, I know
I
sent 2 others to you, and you guys have probably seen these. When a new bull market starts, right? When you're up 20% from the lows, what happens next? The S&P is up 17% average a year later. So that just happened recently. When you make a new 52-week high, which we just did, I got these 2 charts back to back for a reason. When you make a new 52-week high, which we just did, you're up 17% average a year later with wildly bullish returns on the right there. You can see on the right. It's in both of those. So those 2 stand out to me. Is why I put them next to each other. That it's just one number, sure, but that's what I wouldn't want to ignore.
And that's when the S&P 500 makes a new 52-week high, right? So that's now. As much as stocks have already gone up since last year, this stat has kind of just been triggered with that new 52-week high.
Yeah, and the S&P 500 just as of the end of April, so when we entered sell in May, go away, just went positive year over year, right? We were negative for a full year over year on a monthly basis. And that so it just went positive year over year like 2 months ago. I mean, I know we've had this big run, but when you put that in context, it's like, oh, wow. And then that's another wildly bullish returns also. I shared that. I know Stratega shared that one. Todd shared that also back then. It was a great chart. But yeah, it just kind of confirms things. And the whole sell and may go away, as I pointed out many times before, it doesn't always work. In fact, most years you don't sell and may go away, and this year's playing that out once again, because when you're strong heading into it, that's kind of where you are, and that's what's been happening. So it's been a heck of a run. I started 1 year ago at Carson Group, so I love it what I'm doing. I'm having a lot of fun with our advisors, and the market went straight down like my first 3 months. So I know, we bottomed in June, but still, when you're helping people, those guys, what a time to pick a new job. But fortunately, we literally, the day of the lows, we're talking about why it's a low. We upgraded our view in equities in the middle of December when people thought we were crazy to do that. Added equity risk in March. So we've had a good run. And you're right, JC. You're only as good as your last trade, last investment. But it's been fun. And we still think, we're going to be a buyer of these dips with those.
Here's a prediction, Ryan. Ready?
Yeah.
AFC Championship game this year. Miami 27, Cincinnati 13.
Oh boy, well, that would break my heart, but you never know. Yeah, I mean, Joe Burrow. As long as Joe Burrow can walk and we can protect him, I think the Bengals always have a chance.
I saw the Hurricanes play against LSU a few years back, and Burrow tore us up.
Well, you're not the only one. Yeah, he's we've got to run to pay him. I'm going to bring the truck to him. Taylor Swift is in Cincinnati this weekend, so she's bringing a lot of money to the stadium.
You strike me as quite the Taylor Swift fan.
I read an article about her generating $80 million of economic activity everywhere she goes, something like that.
I think my family's been up. We've been a third of that. I think my family. Yeah. So my daughter's going. She's pretty pumped. So I have heard about every song. I'll leave it at that. But
Ryan Dietrich, Chief Market Strategist from Carson Group. Ryan, thanks a lot for coming on. We'll get you on again soon.
Yeah, come back soon.
Have a good fourth, everybody. Adios. Thank you. Take care.
Likewise. Ryan with the gray. That's sort of like white, red, white, and blue. Maybe, I don't know. Okay.
Still no.
No. Okay. Yeah. Let's see what someone made a comment that Ryan's got the sample size to make even me happy, which is thank you, Sam. That's true. Okay. Kimmy, what's on her watch list today? Let's find out.
Kimmy
Hey, guys.
Sokoloff, 7 for 8 yesterday. Beast mode, Kimmy. Beast mode. 7 for 8. And are you going to complain about it? Kimmy loves to complain when she's making money. No, we're good. No complaints this time. You're happy?
Woman. Women always complain.
Jeez, I didn't say that. I said
it.
By the way, you know what? People think I'm sexist sometimes because I'm like, if people just spent more time on trading floors or locker rooms, they'd be a lot less sensitive, right?
Yeah,
Everyone's like all sensitive and they're always offended by things. People are like, oh, JC, that's very sexist. I'm like, sexist? You know who taught me that? Kimmy Sokoloff is the one who told me that if people spend more time on trading floors, they wouldn't be so sensitive. So call me
very
sexist.
sensitive.
I'm just
very sensitive.
quoting a female.
I wish they worked with our old bosses because, I mean, they were pretty tough back then.
Whatever happened to toughen up? Stop being such a little, you know what I mean? Like, just toughen up.
All right. Let's bring it back here. Let's bring it back here. Kimmy, what are we watching today?
So this huge gap up. I have to say, listen, it's month end, quarter end, it's option expiration, it's the weekend before holiday week. I said this week we'll lean bullish. Odds are we were going to close that gap on the SPYs, which we are here and above it this morning. There was a gap on the SPYs at 438.97. We're well above that. Right. I said this week we'll lean bullish, which it has. It's been a great week. We got, that UNP and that LMT like triggered late in the day. We sold those.
These are industrials. Keep coming up.
Yeah. So I have to see, listen, Fridays, I always say this, it's option expiration. I typically wouldn't trade on a Friday. It's always harder, but it's month end. I don't know if they sell into this or like buy into this, I'm not quite sure. So I have to see. I'm going to see if Apple could stay up here. Maybe it pulls in some for a quick short, counter trend trade short. UPS, I recommended earlier in the week and I didn't take the trade. Shame on me, but I'm going to see how it acts. It is consolidating sideways. I want to see if it gets another push or not, potentially to the long side.
To 180? Is that what you're looking at? Target at 180?
Yeah, around there. I mean, we'll start with 177. But also, yesterday, I recommended MSTR yesterday for hopefully a potentially a new high or whatever. And this morning it's hitting there. I mean, I'd love to do a short in it, but where I trade doesn't allow me to short it.
You can't short MSTR.
Sounds like an issue.
No, but other people can, or they do options. So I don't trade options.
I'm going to be watching that UPS. I like that one, Kimmy.
Yeah.
All right, Kimmy, I want to let you go to your room. I know your Open's about to start here. So, guys, Kimmy's live trading the Open and throughout after the Open every single day in her room. If you want to join, there's a few ways to do so. There's the QR code on the screen. There's the link pinned to the top of our chat. There's also the link at the top of the description on YouTube. So, three ways. Check it out. She's there every day. And as we talk about, she has winners all the time.
Happy 4th.
So, happy 4th. Kimmy, PSA real fast while you're here. We're not doing a show on Monday because markets are open half day and
1 o'clock.
Whatever. So no show Monday, no show Tuesday. So Kimmy, we'll see you on Wednesday.
Okay, great. Have a great weekend, guys.
Sounds
good. Go get him, Kimmy. Go get him.
Bye-bye.
7 for 8 yesterday. What a beast she is.
I got something in my nose all of a sudden. I don't know what's going on with me. Okay. You know what we didn't do yet? We have a couple earnings I want to discuss real fast. It's like they never stop. So let's do some earnings, and then, as I understand it, there's nothing exciting in the hot corner today.
Bullshit! There's nothing exciting. Maybe not to you because it's not enough of a sample.
No. Those are not my words. Not my words. I'm just Alfonso. That's what Alfonso told me.
Don't blame Alfonso. Don't blame Alfonso for this.
Oh no, I'm blaming
Alfonso under the bus.
I'm blaming
Alfonso. You don't like it. Don't you? I want the hot corner, but
let's
do the earnings first.
We're doing the earnings first, then we'll go to the hot corner. Fine. Right. Thanks a lot, Alfonso.
Jesus, Spencer.
All right, Nike here. Street doesn't really know what to make of this one. You can tell because of the reaction. It got a hit after hours and it's gotten up all morning here. So sort of a mixed reaction to a mixed report. Also because it was Nike's Q4. It was their fourth quarter, so they also reported some full year stuff here. So anyway, the EPS
have been rising all morning too. That probably hasn't hurt, right?
Sure. The revenue beat, the EPS missed, inventory was where am I? I'm reading here. Inventory was in line, which is generally a good sign. You don't want inventory to go up. They updated their sales in China, which was up in the fourth quarter, but down for the full year on a year-over-year basis. Their sales in China for the quarter was okay, but for the full year was down. Direct revenue, which is what the street loves to see, right? Nike, circumventing Foot Locker, etc. Direct revenue up 15% year over year. Yeah, just an overall mixed one. China looked like it was sort of dragging a little bit.
Can I say something about this?
Of course.
As somebody who tries to be a businessman, right? I try to stay in my lane. I'm a technician. I look at markets, right? But at the end of the day, I've started businesses and sold businesses, and I think like a businessman, or try to anyway. The not following the fiscal calendar, I really like a lot, especially when you structure kind of bonuses, like incentives and, goals for employees and sales and stuff like that, to not get caught up in end of the year stuff when, all these other amateurs are kind of following their fiscal year. I really like changing that, so, right. How do you feel about that, Strazza?
Well, I think you're viewing it from a business owner's perspective. From an accounting or a reporting perspective, there's just a lot of overlap, right? So you're doing year-end things internally. You're also doing year-end reporting, whether it's for the IRS or other regulators, yada, yada, yada. So there's a lot of overlap there, but I get your point. I think so
the way I look at it, because this is something that I have to tell Danny all the time, I don't give a shit.
Right.
It's our job to make the money, and it's our job to make as much money as possible. And it's your fucking job to count it. And if it's a little bit more of a pain in the ass, then too bad, right? Is how I look at it.
You don't care as a business owner that you'll pay more in accounting and professional service fees because of that to not have a fiscal quarter.
I think so, right? How do you feel about that?
I think it's fine. You would know better than me.
But you look at it from an accounting perspective, and you're like, JC's being a pain in the ass.
Well, I mean, look in the chat. I'm not the only one. It's a thing for sure.
It's accounting nightmare. The way I look at it, too bad, right? It's your job to count the money. Right. It's our job to make it. So I'm going to focus on making it. And if it's harder for you to count it, right? Too bad, right?
I don't have an opinion. I just want to know why Nike. Why? Why does Nike do it this way? Why does everyone who has an off-cycle fiscal calendar do?
Have you read Shoe Dog? Have you read Shoe Dog?
I have. I freaking cried at the end.
Did you?
Yeah.
Does he say why?
Old Yeller. It's like Old Yeller.
Does he say why in there?
No, he doesn't.
No, but what I'm saying is they just do gangster stuff,
Right.
Great book, by the way, Shoe Dog. Shout out Shoe Dog. If you haven't read it, go read it.
Yeah, it's an amazing book. Anyway,
they should make a movie out of it.
I hope they do. Nike chart.
I think they probably will.
Are you joking? This is a joke, right?
No. Come on, Steve. We've talked about this. The movie that just came out was like a sequel to Shoe Dog.
Really? No, the movie that just came out was about Jordan. About the
the Shoe Dog.
Jordan.
Shoe Dog. The book ends. The book ends when they sign Michael Jordan. That's like the end of the book.
Yeah, which by the way is what I love about the book, because the whole book is the struggle. It's not the success.
Right.
It's just the struggle.
But they already made the movie. You're not getting the movie. They just made.
Okay. Anyway,
have you read Shoe Dog, Strazza? Have you read it?
No, you know what? First on the list, I'll have listened to it.
Here he is telling us about. He hasn't even read the freaking book. What's cool about the book is that it's all before they're successful.
Well, what's cool about what I get to do is if there's a popular book and you guys read it because it's on the New York Times bestseller list, everybody reads it, then I get to hear what it's about and I don't have to read it. But I'll listen to it on the flight on Monday.
Honestly, you're such a nerd. I think you'd really enjoy it.
I got a lot of books in my audio app that are just piling up, so I got a big list to work through here.
You got to get guys on more flights.
I haven't read too many books. It's a very small business book, very small sample size, but this is the best business book I've ever read. Shoe Dog.
Ow, that's
odd. All right,
best business book. Anyway, back to the chart. Can we go back to the Nike?
Can we talk about?
We have to. It's an ugly chart. Must we look at the chart? It's an ugly chart.
Fine.
Can I talk about the earnings?
Yeah.
Yeah.
Oh, is that allowed?
I'd rather you talk about the price, but sure.
Yeah. Nike used to report something called futures orders. It's been 7 or 8 years now since they discontinued it. It was the best information that you could get from this company. It was basically a really nice read, 30, 45 days into the next quarter of how things were looking, right? They don't do that anymore, and they stopped because that's what the stock used to move on. You're talking about how despite all this, the price action's kind of muted. You don't really see big moves on Nike's reports like you used to because they're not giving us the same information that they used to, and that kind of bothers me as a former accountant. It stinks. But they could do that. Google's done it. A lot of these companies do that, and actually you'll see it in the opposite direction too. I think Google is the one who's famous for it. Might have been Amazon, but I think it was Google. They had a CFO come in about 10 years ago, and he really just redid their segment reporting and allowed people to, I think, see like the YouTube results broken out or something. And it was just like a game changer for the company. So that's something that you'll see from a reporting perspective. Companies will change the amount of information or the level of transparency that they're giving you into their financials as it might benefit them over the years.
All right, there's our opening bell. Let's do Constellation Brands real fast. Let's see.
What do we do?
STZ, Constellation Brands, beer, wine, spirits. Yeah, the booze. There you see the EPS. They beat on the top line, beat on the bottom line, and they gave guidance that I'm trying to now find. I'm pretty sure it was in line.
Did you guys?
The guidance was.
Did you guys look?
Yeah, it was in line.
Did you guys look at that Patriot Index, the Patriotic Index? That somebody
Constellation Brands owns Corona, all the Coronas. They own Modelo Especial. They own Kim Crawford from New Zealand. They own that. They own some Mount Veeder wine. They own Robert Mondavi. They own Robert Mondavi too. Wow, they own a lot of stuff.
They own everything.
Not everything.
They
don't own Chateau Fibonacci.
Them and Brown Forman own like 3/4 of the liquor industry.
Listen, if it's owned by Constellation, if it's wine owned by Constellation Brands, you probably don't want to drink it.
Okay.
So we'll talk about it in recess, but you saw that Patriot Index? It was all like fast food and booze. It was like America's favorite brands.
I put that in there. Yeah.
Did you look at it, JC?
I didn't see it.
All right, we'll talk about it later.
Right.
Okay. All right, Hot Corner. I guess we're talking about that.
Definitely.
Apparently.
Hot Corner. So hot right
now. Oni Oak.
So despite
CEO,
Spencer thinking we don't have anything to talk about.
Yeah, $1.5 million. That's not nothing.
Oh my God. All right, this is the last time I listen to Alfonso. How about that?
Alfonso is someone that you want to listen to. Perhaps there was a miscommunication here, but $1.5 million from the CEO. Who's this guy? This is Pierce Norton II. Do we know anything about Pierce Norton II?
Nope. And I hate when you ask me.
Strazza's like, why do you put me in this position? I don't know. Nobody expects you to know every single investor of all time. So Pierce H. Norton II is he's been around for a while. I don't know how rich he is. $1.5 million.
You're a big LinkedIn guy. Why don't you go search him on LinkedIn?
Because LinkedIn doesn't share net worth, and that's really what I'm interested in here. Anybody know the net worth of this fellow?
Are you
well,
every time? No.
Look,
I don't know his
Pierce
net worth.
Norton, it says his estimated net worth is at least $6.3 million.
Yeah.
So that's nothing. $6.3 million. This guy just bought $1.5 million.
Here's the thing. This guy is just the CEO of some energy company. He's not some like eccentric billionaire. Nobody knows his net worth. Did you just Wikipedia his net worth? Like, I don't even think that
says he made $7 million in 21. So I don't know how accurate these numbers are.
He just made $7 million. He's worth $6 million. It's bad. That's bad data. You're wasting your time there. That's really in large part why we don't.
I think we could just go out on the limb and say this is not a super rich billionaire. It doesesn't seem that way anyway. So $1.5 million is not nothing.
And that's really,
this guy.
That's the only determination.
This guy's he's a multimillionaire. He's a multimillionaire. Right. He's not a billionaire.
Fantastic.
Which might these days means you're broke.
Here's what matters. Okay. Regardless of who this guy is, he just bought stock on the open market. What, $1.5 million worth of it? He didn't do that because he thinks the share price is going to fall. He did that because he thinks it's going to make him money, right? regardless of how much money he has right now. That's the bet he's making. That's why we only look at open market purchases. These guys are literally they're taking money from their savings and investing it into their own company stock. That's what we're looking for here. I'm done with this one. If you zoom in, it looks like one of those not top formations, not as clean as some of the other ones we've been talking about.
Oxy-ish.
It's a little oxy-ish. Not as nice though. Oxy all day, Chevron all day over this one. Next,
I don't want to talk about the biotech because it's too small to discuss. But some interesting options.
It's a good lesson
that we saw in new holdings and you.
It's a good lesson. We're not going to buy it, but they just announced positive phase 1 trial data, right? And then you saw the buy come in afterwards. It's a really small stock, but again, we talk about how important biotechs are. We include it on our list despite how small it is. I really kind of look twice when I see Form 4s filed for these biotech companies because I really do think it's some of the best information. Again, this one's a little bit too small, super gappy. It tripled on Tuesday on the phase 1 data, and now you see the institution kind of coming in and buying some stock. So we'll see. Maybe it'll get big enough for us to buy one day.
Big options coming in on this Brazilian bank. And you.
I think that's one of those new age banks too.
Oh, is that a joke?
Wait, something else on the BDTX, right? They as your one is want to do after a successful phase 1 trial, they're raising some money, right? Obviously,
of course
they're doing an offering,
right? $200 million market cap. They need money. Yeah,
feed the duck.
Right, they need money.
Get some loot.
Yep.
Yeah.
Okay.
Like I said, Bitfarms just did the same thing. Not much different than these Bitcoin miners over here. Get that money. All right, next. I'm done with this.
Chart report.
Let me see if we had any movers I want to hit on.
Movers and shakers.
No, nothing jumping out today.
Yeah. You know what? I can't tell you how excited I am to talk crop report at the top of the hour, though. Like, really.
Okay.
Been watching these grain markets. Ian's going to come on, talk to us about some agricultural futures. This is, from what I'm hearing, the biggest crop report of the millennium.
Well, Ian's here right now.
Wow.
You want to get his thoughts on it?
Yeah, I think we should. Skip the chart report.
All right.
Biggest crop report since the birth of Christ.
Hey, man, that's just what they're saying.
SEC
I don't
says,
know.
Wait, hold on, guys. This is so good. Breaking news. SEC says spot Bitcoin ETF filings are inadequate. They just approved a leveraged Bitcoin ETF.
At least they're consistent in being inconsistent, right?
You got to try hard to be this bad. I'm not gonna say anything else.
Can we hit the chart report? I got a chart.
Chart report? Yeah, okay. Give me like 5 seconds. Okay, chart report. Let's do it. Where's my goddamn? There it is.
Just before you jump in, the candle in Bitcoin is melting on this news right now. Just FYI, and anybody who's following along at home. All right, go for it. Chart report.
Are you looking at incomplete candlesticks again there, Mr. Strazza? You know that if you do that too much, you can go.
Are you looking at pre-market candlesticks there, Mr. Parets?
No.
Yeah, you were looking at the price. JP Morgan, you're on camera doing it.
Yeah, I'm looking at pre-market candlesticks. What's wrong with that? They weren't incomplete. They were fully completed.
Bitcoin now red on the day. Bitcoin has now erased all of its gains from.
Yeah, when does the day start for Bitcoin? Out of curiosity.
It starts midnight for me. That's how I've set my candles.
Oh yeah, you just arbiarily chose that moment in time. All right, I'm gonna go with 7 p.m. the previous evening.
I don't live in the UK.
Neither one of those make any sense at all.
You live in America. The day ends at midnight.
On the East Coast now.
Yeah.
Only
midnight.
on the East Coast.
Did JC time is when the day ends.
Just East Coast time, right? So what about if you live in California? Then you got to go where Strazza lives. Is that the deal?
Hey, Apple 3 trillion. You know what's funny about that? Oh, that's not even in the chat. Sorry, what'd you say?
Can we pull up Caleb Franzen's chart?
Yeah,
I think it makes a lot of sense. Punch that up. Zoom in.
Caleb with the feature.
You know,
how far down is it? I'm scrolling.
It's the chart of the day, so it's all the way at the top.
Oh, I missed it.
It's the chart of the day.
Oh, I guess my riot calls are going to expire worthless again.
No, wait, no. Chart of the day is Todd Sohn. What are you talking about?
Caleb Franson. Am I looking? Oh, shoot. I'm looking at the wrong one. Damn it. Anyway, Caleb Franson. I'm looking at the wrong chart. Sorry, Spencer. My bad. Sorry, I was busting balls.
To do this.
Yeah. Sorry, my bad. Either way, Caleb, what he was pointing out to earlier this week was that, if the S&P 500 is above those August highs, it's hard to be super bearish in equities. And that was really the point he was trying to make. And I appreciate that for sure. So I agree with him in that sense.
All right. Don't be like JC and be reading the wrong edition of the chart report every single day. If you haven't already, get the chart report. First off, there's QR codes on the screen. The link is in the description. And read the current issue.
For the record, I clicked the link on our morning show doc, and the link took me to Wednesday. So I'm getting blamed over here.
Oh, you mean you're being blamed for something that doesn't?
So I don't apologize. I take my apology back, Spencer. This is your fault.
Okay.
Totally your fault.
It's always my fault. Ian Colley, please save us.
Bring him back.
It's your fault, Spencer.
Ian,
good morning, guys.
In the house,
dude.
How you doing?
Can you tell me about this crop report? Is it really the most important crop report in history?
I mean, there's a lot of buzz around it. I'm really interested to see what John Netto has to say at the top of the hour. I want to see how the market reacts, and then next week, I'm going to put together a grain report for all of our readers, so we just break down price levels, see what's actionable, because like Steve just mentioned, a lot of these markets, corn, wheat, soybeans, have absolutely ripped, and they've really come off in the past week. So, it'll be interesting to see how the market reacts.
Is it interesting how all these things are happening as right after they delisted all these ETFs, all these ag ETFs?
Yeah, right. I know.
And that's why
people don't want the commodity ETFs. It's pretty clear.
And that's kind of where my light sarcasm is coming from. Ian has been talking about ags and particularly grains for a long time now, as the leaders within commodities. Now all of a sudden you're telling me there's some, mega crop report that's going to be a monster catalyst for higher prices. We've been seeing higher prices. The market's a discounting mechanism. Seems to me that something like this, I know nothing about this crop report, but when I look at the charts that Ian's been marking up from ags and grains, I have to think it's not baked in. Okay.
Well, I mean, it's a low bar in commodities as far as outperformance, because the metals haven't been doing much. The energies haven't been doing much. So you can point to any outperformance. It's easy
Speaking of metals, the 5-year real yield broke to fresh decade highs yesterday.
Not good for gold.
Not good for gold. Gold back below the former 2011 peak that marked the peak of the prior commodity super cycle. So I mean, it's hanging in there. It's just below it today, but I mean that's not a good sign for precious metals.
In the ags in particular, and I want to get into energy, but in ags in particular, what's setting up for the best trade post report? Like where's your head at in terms of positioning?
In terms of positioning, I like wheat. I like Chicago wheat a lot. It pulled back and it's retesting the highs from early May, those pivot highs. We could see a bounce there. It also violated a downtrend line earlier in the month. So I know we'll see. It's interesting. It found resistance. I don't like looking at moving averages. It's just not my thing. But just so happened that it turned and caught lower right at that 200-day moving average. So, I think this is a good place for it to dig in and potentially start to catch higher.
Okay, so let's talk about energy here. For me, it's front and center. We started putting on, at least I certainly did, putting on energy positions earlier this week in Chevron, thinking that this crude oil hangs in there, that former resistance from 2018 in crude oil, oil stopped going down at the end of last year. Like you can argue that it's kind of been trending a little bit lower, kind of been trending. It's really just done nothing all year. So
right,
oil stopped going down at the end of last year.
Right. So for crude oil, that the floor right now is around $66. But in terms of making a play in the energy market, I think, getting long Chevron or, adding to longs and Oxy, at these levels is probably the best play. Because, what crude oil is at 70 right now. I mean, $5 in crude oil, that's a big move. So to define risk at 65, it's just in a tough spot. I think there's better ways to play the energy market right now than actually going in and trading crude oil futures. But like you said, it stopped going down. It's hanging in there as long as it's above 65. Gotta give it the benefit of the doubt.
And what about copper? Doesn't look terrible.
It doesn't look terrible, but Freeport looks all right. Yeah, Freeport McMoran looks really good. And there's a bit of a divergence between those two charts right now in the near term, which I think is really interesting. Let me dig into that a little later today. But yeah, I look at copper. It's messy. It's just messy. I was looking at the pivot highs from late last year as a key polarity zone, and at this point, it's really just a mess. So I'm, if that $4 level, I think is still pretty important. 415, you want to raise that bar a little bit. But yeah, I mean, it's just a range bound mess, which we're seeing.
I'm pulling up the FCX and the copper futures here. Spencer, if you could just drop that in.
Ian,
slide 1.
In the world of equities, talk to me about commodity stocks. Right, Just mentioned Freeport. What are you seeing out there? And don't talk to me about building material stocks. I'm talking about the ones that actually take stuff out of the ground.
They're not doing great. When I'm looking at stocks that I want to buy that look really good out there right now, I see like transports. I mean, ODFL looks great. Pull that chart up the other
Dominion.
day. I know. I mean, I think it's an absolute beast.
One of the best stocks. One of the best stocks.
Yeah.
Of all time.
When you zoom out, this thing is a monster. Yeah.
It went the longest without getting oversold in there was one point where it hadn't been oversold in years and years and years.
That's right. Ian, how excited are you about multi-month highs, highest level since March in materials index? I can't help but think in a world where industrials are really working, we're starting to see some rotation in the small caps. Financials are holding, energy's bouncing. Are materials going to catch some, rotational tailwinds here and start, become a leadership group?
I think so. And I think looking at energy or looking at futures in the actual commodity markets themselves, the physical commodities, I think energy is going to be the next place where we start to see some outperformance. I see precious metals break down and start to roll over. Softs are starting to, big sell off in sugar recently. Cattle are hanging in there. Grains are, trying to find their footing. We'll see what happens later today. But I think this is a good opportunity or a good point in the cycle to start to see energy, crude oil, heating oil, gasoline start to catch higher again. And hopefully that spills over into other pro-cyclical areas like the base and industrial metals, copper, tin, steel, so some of those areas.
We talk about the precious metals miners. We're getting some questions in the chat on the GDX. Can you just punch that up? This thing's just a hot mess.
Yeah, I want to see close the month above 30. And, it continues to catch lower. It looks a lot like silver. Charts look very similar.
I hate to keep going back there, but there's really only one group of mining stocks you should be buying right now. And they're not digging stuff up out of the ground.
Oh, I see what you did there. Oh, you are a clever one, Mr. Strazza. You are a clever one. Strazza's talking about mining for digital currencies versus mining for rocks.
Chart or it didn't happen?
What do you want to show the WAGMI?
We have a performance chart of it.
Oh, yeah. Show the performance chart. Good call. Wow. So these are all different minings. Rare earth metals. I like how you threw that one in there. That's hot.
Even threw coal in. It's not a party with coal miners.
I like how there's no coal ETF, so you just had to throw one of the coal stocks. Like,
I'm working with what I got here. I can't use my custom index in Koifin.
We gotta talk to Rob about that. But yeah, look at that. You got lithium, rare earth, copper, gold, silver miners, and coal, and then you got your Bitcoin miners up at the top. It's a great chart. Great chart.
It makes the point.
Who gets credit for this one? Was this Strazza or was this the Fonz?
Yeah, and I still don't like BSM.
Who gets credit for this chart, Strazza?
I actually made this one.
All right. We'll give Strazza the credit. You could do the round of applause there, Strazza. You want to press the button? You can go ahead. Very good. Very good.
I can chart. Woke up this morning. My laptop was black screen.
Ooh.
Freaked out for a second. It's back now, though.
All right. Should we do a little we got Neto coming in 10 minutes. Extended show today. Spencer, you want to tell the kids we got an extended show, got a big surprise that we've already talked about 3 times already. Big surprise. It's not such a surprise at 10 o'clock today. Before recess, you want to tell the folks what we're going to talk about?
Yeah, John Neto, who is our go-to economic trading guru, is going to come on, like you said, at 10 o'clock to break down the crop report, what it is, first off, but more importantly, why it matters and how he's going to trade it. That's the important thing.
I hope the conversation really revolves around what is a crop report. We should spend the majority of time on that.
I want to know what we're buying. I don't give a damn about the report.
Right. How he's trading it. That's the most important thing here.
I don't care about the stupid report.
Wait, Ian, am I right? Am I right? Is this the same report that was at the climax of trading places?
I have no idea.
All right,
that would be amazing.
John would know. I'll ask.
And I think maybe.
Chat, great work with Ian here. Ian, make sure you go back and read the chat later.
Dude, the chat is
like the Hawks chart
today.
though.
The chat.
I do like the chart of Hawks.
Chat's on fire today, especially with Ian's hair. Okay, let's do
great hair.
Real fast. Before I move away from it, so the SEC just poured cold water on the Bitcoin ETFs, the spot ETFs.
Breaking news from the past by Spencer Israel.
And no. And here's the reason why. Do you know why they rejected it?
Yeah, they said I read the article while you guys are over here talking about crops. I already read the
They didn't. Okay, they didn't. All these
inadequate
companies filing. They didn't name the spot exchange where that they would have had the information sharing agreement with. No one named
BlackRock's is going to be Coinbase. They already said that. Maybe they didn't put it in the filing, but I'm not sure what's unclear here. Like BlackRock has an agreement with Coinbase to do explicitly this. So I'm not sure what's confusing. This just sounds like more red tape, more bullshit.
That's
what it
said,
is.
man.
It's more bullshit.
Okay, let's do some. I guess we're doing some recess. Why the hell not?
Yeah, Fidelity Investments. Just a little follow up. Fidelity already came back. These companies are already pissed and said that the filings are sufficiently clear and comprehensive. So.
They're mad. Oh, and before I forget, there was a question at the top of the show. Someone asked what software you guys use for charts. You want to talk about that for 2 seconds?
We use Optima and we use Koifin.
Yeah. There we go. Okay.
And TradingView, dude.
Rare.
It felt like that bumper was sped up.
Was it? No, it's about the same.
All right.
So what do they like to do around here is grill clams. I am getting 400 clams. 400 clams for the grill over the next few days. We are going to be crushing these things. I'm playing golf with Jeff Hirsch on Sunday.
So jealous.
Jeff Hirsch of the Stock Traders Almanac. It is seasonally the time to be golfing, and so Jeff Hirsch and I are going to be dad joke. Dad joke. All right, sorry, I thought it was good.
I liked it.
Ian liked it, but Ian's a dad, so he's like, all right, I can relate. So shout out Jeff Hirsch of the Stock Traders Almanac. I'm going to try to not hurt myself on Sunday. I haven't played golf in years, Strazza. Should we get some video footage? We're going to get video footage. Strazza plays all the time, dude. I never play.
No, I'm just jealous I can't be there with you guys. I would love to join you guys. I was planning to be up in the Northeast this week.
And Stock Market Mike says that's a lot of clams. You know, you'd be surprised. You fly through these things. You throw them on the grill. You throw like
how you do it.
60 at a time, 60, 70 at a time. They go fast, man. I'm eating half of them before I even share them with other people. You know, it's just kind of little tasty test. You know, I do a little schmutz. I make like a little schmutz of like,
butter.
You know, butter and garlic and like Italian seasoning and stuff like that. I might get creative and do some stuffed clams. Stuff them like maybe with some mushrooms.
I don't think so. Keep it simple. Let the seafood do the talking. Like you said, a little bit of light butter, garlic, a little bit of lime or lemon.
I know, but I have 400 of them, so I can get creative.
No, that's just a lot of steamers. That's how you do it. I would steam them too. I know you like the grill, but if you have that many, just get a big old pot. Steam them.
I know it's more complicated steaming them. I like them on the grill easier.
But you have a lot. Is my point.
Have a lot, yeah.
All right.
I mean, you know.
So what are you
my
drinking?
daughter loves them.
JC, the chat wants to know how tennis was.
How tennis was yesterday?
How'd you do?
Wrist is feeling pretty good, I must say. Feeling pretty good. I would have taken the under. I kind of I serve. Let me tell you something. Okay. I got some velocity on that serve. Let me tell you.
Okay.
Let me tell you about the velocity on that serve. Feeling pretty good.
All right. Ian, what's going on this weekend? Anything good?
No, just gonna take it easy, play with the kids. You know,
nice. All right,
spend a lot of time in the pool.
We'll save Strazza for last because he has the best retest.
Throw up pool. Throw up the pool chart. Ian just made a great point. 4th of July is for pool parties. Happy 4th of July, everybody. I grew up having pool parties on the 4th of July. I also had my birthday like 2 weeks later. July is the best month. Summer in New England, summer in the Northeast. You know, me and Ian are down here in Florida. I'm going to be in Asia. But I'll be thinking about you guys. And I think JC is going to be having like pool party bashes this time next year. So I can't wait for that. So this is a little chart art for the 4th of July.
Strazza, I'll be in New England for the weekend. I'm going up to Vermont. Where my aunt and uncle have a place. Haven't been up there in like a decade.
Is Vermont considered New England? Is that New England?
Yeah.
Yeah, of course.
I don't know. I don't think so.
No, come on. Stop, JC. So check us out. Saturday night, I'm going to a rodeo. And then Monday night, Monday night, Demolition Derby.
Awesome.
Wow.
Very cool.
Sounds like you're in Alabama, not Vermont.
Those are both very 4th of July things. Good for you. Good work.
Oh, yeah.
Excellent.
For the record, Vermont is part of New England.
Do we want to look at Yeah, no shit. Do we want to look at the Patriot Index?
I don't think, like in my head, Connecticut and Vermont are not New England.
Connecticut is the end of the tri-state area, but also the beginning of New England. It's both.
See, I don't think it is. I don't think it's New England. Maybe like the southeast of Connecticut might be a little bit more New England.
No. You're absolutely wrong because northern Connecticut is more New Englandy up by Mystic. No, you're so wrong.
No. I'm telling you, Connecticut, for the record, is part of New England. In my head, like the way I like to live my life, Vermont and Connecticut are not.
Yeah, let's do a bit. JC explains Connecticut to Steve, who lived there his whole life. All right, sure.
I went to college there. I lived there for 4 years.
Yeah, you lived in Fairfield for a few years. Okay, Patriot Index. Talk about American brands here. What do you guys think of this?
Wow.
I said,
Brett
you know, joke. What was Brett's joke? Brett had a good pun, with some wordplay.
So the source for this index was actually a brand survey. You know how these there's always a gajillion PR surveys and et cetera, et cetera. This was a survey by some random company about surveying people what they thought were the most patriotic brands in the U.S.
All I see is sugar, beer, and motorcycles.
Yeah. And so we took the top 20.
Where's McDonald's? Number one. Number two,
So
what is BF.B? What is BF.B?
That's
McDonald's
Brown-Forman.
have too much international exposure, but also like how is Nike not on here? Right, some of these like recognizable.
Hold on, BF.B. What is it?
I can explain to you. That's Brown-Forman. They own Jack Daniels. Okay, and Jack Daniels is the brand.
American. I'll give you that one.
Right. So again, I only took the top 20 McDonald's is on the list, but they weren't top 20. So
what about American Airlines? Hello?
No, because all Americans hate airlines. I was talking about this. It's an awful consumer experience. Nobody wants to list an airline as their favorite brand. What are you talking about?
Oh,
This is
God. So
brands
these are
people
favorite
like.
brands. All right. Fair. Okay.
But like something like Ford, GM, they got Harley Davidson.
Ford and GM didn't make the cut. Oh, Ford is in here. GM's
Ford
not,
is
right?
there. Yeah. Levi Strauss. Okay.
Walmart. These Americans love their Walmart, dude. I don't even know if I've ever been to a Walmart.
JC, does Budweiser make the list again next year?
Is Budweiser on this list? No.
Oh, that's Molson Coors. Yeah, you're right. They don't have Bud.
No, it's not an American company.
Come on.
What do you mean, come on? It's not an American company.
Could still be on the list. It's an American brand.
No, and people don't like it these days, You know how they get very sensitive.
Somebody was saying that Nike's woke in the chat. I don't.
Yeah,
that's true. That's news to me. I didn't know. I love.
Yeah, I think because of I think they were the original woke because of Kaepernick and all that stuff. No.
Oh, that's right.
So
I wish these brands would stay out of it, but if they can't, you can also just ignore it. I still like Nike. I don't care about. You don't have to listen to any of that.
Chris, good point here. U.S. Steel. No love for U.S. Steel.
No. GE either.
The reason that Stellantis is on here,
another one. Good call.
Hold on. So the reason Stellantis STLA is on here is because they own Jeep, and Jeep was seen as the most patriotic brand. Okay. The reason TAP is on here is because they own Coors. Brown-Forman owns Jack Daniels, and Comcast owns MSNBC. So Fox and MSNBC were both seen as the most patriotic brands, which I found to be just perfect
for half the country.
Ralph Lauren, huh?
JC, when you drive your Jeep, do you beep at other Jeep drivers, and do they beep back at you?
I don't have a Jeep. I don't have a Jeep.
You used to have a Jeep.
My wife used to have a Jeep. I do not have a Jeep. I am a Denali. We have a Denali, and we have the Mercedes SUV.
Don't ignore my question. When you used to drive your wife's Jeep, did you beep at other Jeep owners?
No, but when we see another Denali, see another Denali, I do beep at it, and my wife thinks I'm crazy.
Because it's not a thing. You're trying to.
I made it a thing. I made it a thing. Can we bring Neto in? This is ridiculous.
Real trendsetter here.
I'm trying. Yeah, I can't get a word in edgewise. All right, John Neto coming on to break down this important crop report here, noon Eastern time, so 2 hours from now.
Let's get the ag charts.
Yeah, Neto, what's going on, man?
John.
What's going on, Spencer, JC, Steve, Ian? A pleasure. Yeah, we have at our doorstep the most important grain number of the year. We've seen this market. If you put up a corn chart, you have a corn chart. We can show real quick just to give some context of what a round trip looks like in a stock.
Throw up the corn chart.
Do we have
corn?
Do we have it? It's okay if we don't. I want you to imagine basically a chart going from $5.10, gaining about 24% or 25% in a week, and then losing most of it back the very next week. And that's what happens in the grain markets when we get into a weather space. And so that's at play today. Now, a lot of people these grain reports, as we know from Trading Places, from Eddie Murphy and Dan Aykroyd 45 years ago, that these crop reports can be very valuable. I think in that movie was orange juice, so there won't be any orange juice reports or movements today, but corn and soybeans are something that, a lot of us see. The food inflation that's gone on, it's something the Fed pays attention to, at least peripherally. And I can't think of a better way to have some 4th of July fireworks and look at that. Now, so here's some context. The straddle.
Yeah. John, can you explain why, take a step back, kind of set the stage for us. Why is it such an important report? What's going on here?
Sure. So there are two components, Steve, of this report that the market's looking at. One, the stocks number. So we're getting quarterly grain stocks from soybeans and corn. And that's been an issue in terms of the supply that we have out there. That corn stocks report makes up like 70% of the importance behind this. Okay. And then the other component they give is the acres planted. So one is how much of an inventory we have right now on us. All right. If we have a lot, that's more bearish. If we don't have much, that means supplies are tight. That's very bullish. And then the second component of this is what happens with the acreage that's been planted. So the USDA is also going to throw out, well, how much acres are in the ground? And this is important because of the way that corn and soybeans pollinate. So corn pollinates in July, soybeans in August or September. And as a result of that, this is going to give us a good indication of, okay, if supplies are tight, but the acreage looks good. That can offset that. But if
So
both of those,
is that like a read on future supply?
yeah, absolutely. Well, the supply is the current supply, and it tells you but the acreage is a read on future supply. I think that's what you're getting at. Yeah.
The stock is the current supply. The acreage is the future supply.
Correct.
So that's paying attention to. All right.
Correct.
Makes sense.
And so, and we've been run by a weather market so far the last 3 or 4 weeks because it's been super hot in the Midwest. Finally, this week though, the I states, Indiana, Illinois, Iowa, have actually shown us quite a bit of rain, which is why you've seen such a huge move back down the other way in the corn futures from the start of, or from even last week. They're down close to 18% in corn, which corn is the most liquid agricultural product out there. Crude obviously is the most liquid commodity out there. But to see a move like that just tells you how important weather is. Well, now all eyes go to this report. And so this will be, for noon Eastern time, for those of you where stocks aren't moving that much, these grain markets will be popping. And the straddles are a reflection of that. We have the most richest one-day straddles today, meaning implied volatility is really high. Or implied volatility is the highest one-day implied vol of the year for this report today.
What is it?
So implied volatility is about 65% on corn today, 65% on soybeans, and about 45% on corn.
John, how do you navigate? We're getting information from soybeans. We have soybean meal, we have soybean oil.
Yeah.
What's the trade?
Well, the trade is if we get an outlier. So they're actually going to follow each other pretty close. So that soy meal, soy oil, soybean oil complex that whole soy complex is going to move in unison off of this. Okay. Soybeans themselves will move the most, and will give us the most exacerbated move. They'll lead the way, but we're in a nice spot because about a week ago this number was going to be put to the side or not given as much relevance because of the intensity of the weather market. And whenever you get in an intense weather market, kind of that stuff all goes to the side. Well, now that the weather market sort of has eased itself, we have soybeans which are in a really nice midpoint. Okay, so soybeans can rally up even 60, 70 cents today, or they can rally 4 or 5% on this, or sell off 4 or 5% of this, because you don't want to come into a market if you want to trade the event where you're at one extreme or the other. Instead, we're coming about neutrally or fairly priced, given the round trip movement we've had in the last 2 weeks.
When I look at these soybean charts, guys, Ian, JC, we talked a lot about these potential non-tops on today's show. That's what I'm seeing from these soybean futures. These are set up to be some nice not tops.
What do you think, Neto? You think we squeeze?
Back to new highs? We trade true to the direction. If we get a bullish number, we're going to smash through new highs. And these crop markets, much like the equity markets, tend to overdo it when they get into an emotional market. They tend to go a little too far one way and come back a little too much the other. And so, do I really think that the weather problems? To be fair, I'm not a meteorologist. I was in the Marine Corps, but I'm not for 30 years now. But these weather markets, they trade to extremes. We've probably traded too much back this week. We've sold off too much from the tops in corn and soybeans. And if we get even a bullish report or even a modestly bullish report, we're probably going to retrace half of that loss of this week, because the trend is still higher. So, however, if we don't, I'll say this. I like where soybeans are priced because if you put back that soybean chart, you'll see, if we get an extreme one way or the other, we should be able to sell and wipe out that entire rally on a really bearish move today. Or conversely, we could wipe out that entire sell-off on a bullish move today. And so, looking at soybeans now, that 12, we're currently trading, blah, blah, blah. Yeah, 12.88 right now. We're up 22 cents on the day, which is a really nice bounce off that low. We can rally, even $14 by Wednesday. You know what I mean? And that's a beautiful thing.
I want to talk about the stock market, about the types of stocks that can benefit or lose from this sort of situation. The first name that comes up, when we have these sort of conversations, if you want to throw in slide 1, it's Archer Daniels Midland. And Strazza, you're talking about not a top. Yep. Neto, what are the chances that this is not a monster top in Archer Daniels Midland? And this is just, we're down near support. You hold your nose and buy it. Number 1, does that make sense to you? Number 2, if you get the squeezes in corn and beans, are you going to get the squeeze in ADM as well?
ADM should benefit marginally. The issue with ADM, I believe, is that, and then a lot of these commodity producers, is that the input cost to actually service and get these commodities out is a factor against their margins. Okay, so the price of commodities is only it's a material input, but it's not the exclusive input of what determines their overall profitability, which is why you would think intuitively, well, if I just overlay a wheat, corn, and soybean chart on top of ADM, I'd have a nice facsimile, but you don't, because It's also a reflection of their management, their input costs, their labor costs. And as we know, input costs and et cetera it's been a bugaboo with the Fed. And so there's more to it than just simply the price of commodities in that.
The cost of chemicals and everything in their cost structure is rising along with the cost or the price of their what they're selling on the top line, right?
That's my understanding of ADM. I'm not an AD. I don't cover ADM per se, but in terms of juxtapositioning that the stock commodity dynamic, those are the driving factors.
How about some of these chemicals companies though, right? Like JC, doesn't that make sense, John? More crops.
First of all, throw in the ADM with corn overlaid quickly there, just so you could see that they, to me, if one's going higher, I'm not going to bet the other one's going lower. Take a look at that. I don't know. If corn's ripping, I'm not going to be shorting ADM.
No, absolutely not. Yeah. So I think
you like how I made the line yellow? Is that what it did there?
That was impressive.
The worst yellow. That's the worst color. We were just telling Alfonso to change the color.
It's mustard yellow.
Ugh.
Mustard yellow. Appropriate for 4th of July hot dogs, though. Maybe not optically the best, but it definitely evokes memories of this 4th of July weekend.
Yeah, do you know that my first job was at a hot dog joint, making hot dogs in Miami. I was just a young lad, and traditionally ketchup is not put on hot dogs. I personally put ketchup on hot dogs, but it's a mustard thing. Did you guys know that?
Yeah, I knew
People
that.
take this very seriously.
My first job was also at a Babe Ruth baseball field as a teenager, flipping hot dogs. That's funny.
I was not at a baseball field. I was at a hot dog joint.
I was at a baseball field, but the hot dog joint at the baseball field.
You should go. Next time you're in Miami, Arbetter's Hot Dogs on Bird Road, 87th Avenue. Go in there. If you say, I love Larry Bird, you get a free refill. Because they're Boston guys.
Okay. That makes sense.
All right, John Neto, thanks for coming on, man. Looking forward to having you back on again next time there's a big economic event we're talking about. We'll definitely follow up about how this whole report out.
Thanks a lot, guys. Happy 4th of July to everyone. Pleasure being here.
See you later, John. Thanks for coming in.
All right. And we're wrapping up. That's the end of our show here. We are on a 4-day break. We'll be back some of us will be back on a Wednesday. Steve Strazza will not, although we will still talk to him live from Asia, wherever he is in the world. And so next time you see Steve, he'll be on the other side of the globe. Looking forward to that. In the meantime, that's a wrap. Thanks to our guest today. Thanks to Ryan Dietrich, Kimmy Sokoloff, John Neto, Ian Culley. Thanks for hanging out. As always, guys, stay tuned to the channel an hour and a half from now. What the Fick? Ian and myself will be live breaking down all the charts in currencies, commodities, and fixed income. It'll be at 11:30 Eastern Time right here on Stock Market TV. Thanks to everyone in the chat. You guys were on fire today with some of your comments. Hilarious. Great stuff. If you want to drop us a like, we'd appreciate that as well. And that's a wrap. See you guys later.
Travel, Strazza. Travel safely. Get back safe, all right? We need you around here, all right?
Happy 4th, everybody.
Adios.
Yeah.
Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off.